The G22 report. I am your host, Johnnie Market. You all know that drill. Smash that like button. Subscribe if you already haven't. Just a little disclaimer. Nothing should be construed as financial investment advice. This is just my opinions, my thoughts on the market. So let's get into today's stuff. I always start with the economic data. Let's start with that. And Chicago Fed national activity, that's up 0.18. So the S&P Global Composite, the PMI was 53.5, which was above the last one. In terms of manufacturing, though, that's in contraction. So global manufacturing, that's in contraction, but the services are up 54.3. So overall, this is actually solid data. I mean, I don't think this is the reason, but the markets, they're up today. As I said, they were due for a bounce. I don't think there was anything in particular. Dow Jones up 597, the S&P's up 100. And I don't know exactly what's going to happen, but uh, I reiterated, I think it could come back up here, like maybe a double or triple top, or it could just come up, go to 62 or 6,500, and that could be a real big top. But it's due for some sort of bounce. Maybe it'll just come up to 5,800 and then come, don't know. Could be in for one more bull market year. And then I think it will be done after that. So as I said though, I think they're going to have a big, massive fiscal and monetary stimulus coming in the next 6 months. I do think, and right now the Fed has said it's going to cut interest rates twice, and I think there'll be a big. They might even do more than that. So I think they're going to try to remonetize the debt this year, and that's going to be. So that's the thing. In terms of gold, I remember 3,000 was a target. A lot of technicians are now saying there was a top, like a couple of days after. All these Elliott Wave people, they must be, and these technical people and everything, they must be listening to my channel instead of getting it because the market likes round numbers. And I said 3,000, that was the target. I've been pounding that. And gold today, this is GLD, but that's down 0.45 percent. I'd love to go to Kiko and see spot price, but the thing about Kiko is that they don't have like closing and after hours. But let's look at. I'm just gonna try Yahoo Finance because that's easier. But yeah, if you look at it today on a 5 day, that's really down. But today, let's see, one day, what was that? As you can tell, it opened lower, came down, and it was down pretty significant. They don't have. I wish they had the whole. But wow, the futures market, doesn't matter. But yeah, gold. I think it's done. Like it can happen many ways. Let's go to like a 5 year. Right now, it's around 3,000, and what it could do is come back down to 27,500, go to 29 just base. Now, I think if it just goes down 100 or 150, I think it'll base for 3 to 4 months, maybe even longer, and then make its final upswing where it's maybe like 1,000. Or it could come back down to, over a month or 6 weeks and then start going up again. That's what I think will happen. Now, if it goes like to 2,500 real quick, then it's time to go in. So, but looking at this 2000, 10. It likes to break round numbers, so like this was December of 2009. It broke 1,000, and once it broke 1,000, a year and a half later, 16 months or 18 months, it went up 900. And that's like almost a a double. It's a 90% move. Now, in terms of this is where gold was. This was like a 30% move. It wasn't like a 90% move. A 90% move would be around, say, 4,800. Let me see. 90% of, I'm just going to go on my phone real quick. 2,000. Yeah, that'll be like a 4,800 move, 4,800. So I do think if this was any type of, this could come back down, and I think it'll go somewhere between 35 or 4,000. Who knows? It could be 4,500. I don't think it'll make 5,000 yet. I think it's going to be like 2,000, and I think 5,000 is more like the 2,000s of the 2010. So, but we're in correction mode now. So who knows? It could go up. I think if it goes up a lot more, then goes up to 3,500, then it's going to be due for just a bigger pullback. But that 3,000, the market likes round numbers. If you look at 2010, when it really broke 1,000, and that was around, it just went straight up to 1,900. So you have to look at it. 2007, it was around, this is 972. It came back down. And then, sorry, I'm looking at late 2009, breaks 1,000, and August of 2011 when it tops. So for 1 year, it just really went up. So I think this is more like the 1,000s probably come back down, then break 3,000, go maybe close to 4,000, and then finish. So we're monitoring gold. Obviously, if you've been listening to this channel, you know what the target is. Silver around 50. That's going to tell everything. So that will be my next sort of one. I'll probably sell some and then see if I'm out or going to sell down a lot and then wait a couple of years because it will tell you. I think if it breaks 50, goes to 75, then this market's done probably for like 8 years. I hate repeating myself, but if it goes around 50, doesn't break, it's probably done for 4 to 5 years. Then I'll make one more upswing. If it goes to 150, then I think it's just done for 10 years. So anyway, that's all. I talk about the stock market, I talk about gold. And the thing is, gold's at this is new all-time high, so there's no real price trajectory where we can really work off of where we can really. So that's why I say silver at 50. When silver goes to 50, gold could be at 3,800, it could be at 3,200. So let's see. In terms of the some of the things in the economy, thought this was interesting. Army of retail investors fighting the U.S. stock market. Mom and pop investors have brought U.S. equities 7 straight days ending Wednesday. Individuals sold stocks on net only 7 trading days out of 52 in 2025. So, do we have another roaring kitty where they're going to upend the market? So, we'll see. Are all the hedge funds and everything short? I don't know, but Generally, retail is a sign of a top, but you never know. There could be a roaring kitty in there somewhere. Oh, but in terms of the actual economy, look at this here. Athletic shoe outlet files for bankruptcy amid slow store clothing chaos. So, see, they show Jordan brands, Nike, Soul Play, which I don't know much about this, but stores Jersey, Pennsylvania, Delaware, Maryland, Connecticut, Rhode Island. Sells premier sneakers. Nike Air Jordans, Asics, Adidas, Yeezys, as well as high-end brands Stussy. Sorry if I don't Fear of God Essentials, Guess. But if this is true, they're the high-end brands. I would say in Cherry Hill, New Jersey, which is supposed to be a richer area, this goes to show it's not just a low income consumer that's really hurting. So 15,000 retail outlets could shut down in this year alone. So highest numbers of since the pandemic. So yeah, I mean, everyone says it's all just a low income, but not true. Trickle up poverty. Remember, that's what we're in. And you're starting to see the wealthy hurt. Remember, you're only as strong as your weakest link. And that's the truth in anything. Economics, athletics. Look at America. Follow the American athlete. Go look at who the best player in the NBA is. It's Jokic. It's not American. Best baseball player, Juan Soto. It's Dominican. It's not American. Vlad Guerrero is from Canada. Shohei Ohtani from Japan. I've done this on separate, but the NFL, like National Football, that's like the JV. American, falling athletes. So then go look at hockey. It's all Canadians, Russians. So anyway, let's get back into the economy. Holy cow. The share of Americans planning vacations dropped 39.7%, biggest drop since 2020. Outside of global lockdowns, consumer vacation planning has not been this low in 15 years. So yeah, if you look at this vacations, the 80s, look at that. And then the 90s, we're supposed to be getting richer, but you can tell they're planning. And then they just really drop. Of course, it spikes up. And then 2019, well, that makes sense. And then look at that's the pandemic comes up. Yeah, so Americans are vacationing less, and it's probably going to come back around, maybe not around here, but I'd say lowest since Great Financial. Yeah, that's 2000. Of course, and of course, this was revenge travel. This is probably more the norm. The 1980s, that's where, excuse me. And lastly, Federal Reserve loses 76 billion, 77.6 billion. I wonder, there it is, 77.6 billion. So, and I'm just gonna see. And yeah, interest rates low were very profitable for them. That's why they love doing that. So they are gonna go away from monetary tightening. If you paid attention, I didn't pay all that much attention, but I saw this their last meeting. So there a big stimulus from the Fed's coming, and that's why I think there'll be one big upswing, maybe up to it could be anywhere from depending on where this crash can be anywhere from, in my opinion, 35 to 4,800. I don't know exactly, but I think silver is definitely going to go back up to 50, and it could break 50. So I'll see. I try a discipline approach. For example, I had loans, paid them off. I paid them off because I 3,000 was my target. And during the 2011 run, the biggest mistake I made is I didn't have a disciplined approach to selling. I didn't sell. I didn't get rid of a lot of things. I had some rare earth stocks that went astronomically high. And so I have some sort of discipline. And so I definitely want to buy a house sometime. So when my portfolio goes up, I want to, do things like, okay, this can buy a house. This can buy not just a house, but this can buy, what is that thing? Pay off debt. And then this can provide savings, retirement. So I do have a disciplined approach. This time, 3,000 was my first. And how gold generally goes is that the big royalties and the big senior caps, they go first. They're the first to run. Then the middle part, like once gold breaks 3,000 and starts going, the mid tiers will probably be the biggest winners. And then towards the end of that run, the juniors will probably be the uh, winners. So that's why I have a disciplined approach. That's why I took the royalty and streaming, because a lot of the juniors, mid tiers I own, I think they have way more room to run. And I mean, I would love to have a stock newsletter, but I don't know how much longer this gold bull market's going to be. I don't think it's like the 2002 where it's going to go all 10 years. So I can just keep doing stocks, keep doing stocks, keep doing. But I would like to have one because I think in the next couple of years there's going to be like a 10 to 15 year foreign stock market. I think they're going to benefit from the great capital rotation from U.S. assets to foreign. Where it's the BRICS, Eastern Europe. I think Eastern Europe is going to be the best place to live over the next 20 years after this game. They may have problems with Russia, but in terms of just, I'm not going to get into it on podcast. I'm being recorded, but it's just like there's many different. I've been to Eastern Europe, beautiful country, and so many advantages to people or whatnot. So hopefully they still have smart policy and everything. And I think that would be the premier place, just from a personal standpoint, to live. But America's finished. I don't know what else to say. But anyway, that's all I have. See the bad economy, see everything. In terms of the markets, same thing. I do think they'll be in for a bounce. I even think Tesla's due for a bounce. Even though that car company is finished, it could even go up, make a new high, and then just tank again. And stock's all hype. It's a product of this current. It's the product of this current cheap money, whatnot. So anyway, that's all. Hit that like button, subscribe if you haven't, and remember, not financial investment advice. I'll see you next video.